The India-US trade deal sparks the mother of all stock market rallies in India, with the benchmark Nifty opening 1,200 points higher. Before some profit-taking trims gains, the advance decline ratio is sharply skewed towards advances.
A phone call between Donald Trump and Narendra Modi seals the long-awaited US-India trade deal. Tariff on a wide range of Indian exports will now drop from 50% to 18%. Stocks of textile, chemical, seafood exporters rally in trade.
Indian industry leaders suggest there may be relief beyond the reciprocal tariffs, with the US imposed national security-led tariffs under Section 232 on metals and auto products also being lowered to 18%.
PB Fintech's board will meet on Feb 5th to approve a QIP for funding an acquisition. Meanwhile, Aditya Birla Capital's housing finance arm mops up around 2,750 crores from Advent as growth capital for 14.3% stake. Both deals were earlier reported by CNBC-TV18.
Hello and welcome to Halftime Report, live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always, Ekta Batra and Vinny Motiwala. You have to say there are a confluence of factors which are leading to the market rally that we are seeing. Of course, we had budget to talk about yesterday. Today, it's the trade deal. And in a few days, we'll talk about the RBI monetary policy as well. So very, very heavy week. But across the board, it's a big gain that we are seeing. Be it the Nifty, which is up almost 1,000 points as we speak, above the 25,800 mark, or the mid-caps, which are up 4%. And that has been an underperformer for a long time. Of course, sector-specific points we'll discuss in greater detail. For now, we came off from the opening highs, of course, but we have continued to remain around that 25,800 mark. Mid-caps also above that 59,000 mark. But again, the opening highs, they could not sustain those levels, but I don't think anybody's complaining today.
Nobody's complaining today. It's surely a good day coming in. Everyone was waiting for this trade deal to happen. There was more on the sentiment front as well. So that is also playing out. And obviously, look at sectors. All the sectors today are trading in the green. Realty, financial services, pharma, all of them among the top sectoral gainers. FMCG also is holding on to mild green, but still 0.3% of gain right now, even for the FMCG pack. And advance decline ratio also today, obviously we're seeing in the favor of advances versus declining.
Hi, girls. Yes, absolutely. You know, the initial euphoria might have cooled down, but for the markets, the message is loud and clear that the India-US trade deal was long awaited and is one of the biggest triggers for the market. Yes, currently we do have the Nifty at around 25,820 odd. It's up around 3 odd percent. We have the mid-cap index, which is rallied with a gain of around 3 odd percent. The advance decline ratio has sustained on the advancing side from the get-go. So currently around 3,400 stocks advancing to around 874 stocks, which are declining at this point in time. No prizes for guessing that we have a whole host of stocks from the entire textile space, which is buzzing around, from the chemical space, all the export-focused stocks which are really taking it on in the stride in terms of the gains that we're seeing. But let's focus on our What's Trending segment on Halftime Report. It is the mother of all market moves today. The markets have surged after New Delhi and Washington sealed that long-awaited trade deal, with tariffs on key Indian exports slashed sharply. The Nifty opened over 1,000 points higher before some profit-taking set in. And export-linked stocks that are stealing the spotlight in today's trading session continue to be in our What's Trending segment. Let's go across to Hormuz for all the stocks in focus on the back of this trade deal and how it stacks up.
You know, the theme of this basically is the fact that patience eventually pays off, but there is still a long way to go, even if we still consider today's up move. And I'm talking about both the export-oriented names and a shrimp name, Avanti Feeds, in this list. But before we get to the numbers, you look at as of yesterday's closing, all of these stocks were still down significantly from the Liberation Day of the 2nd of April when Donald Trump first announced those tariffs. Then the Gokaldas exports was down almost 30%, Indocount down around 10. Arvind had recovered most of its losses, so it was down, it was flat. And if you go further, the big trigger today is the fact that the deal has been announced. The deal has ensured that the 50% tariff that was currently in place for Indian exports goes down to 18%. That makes Indian exports, particularly the textile segment, more competitive compared to Bangladesh and Vietnam, who are still taxed at 20%. That's a big positive for them. And it's also significant because they get around 50 to 70% of their top line from the US markets. Now, talking talking about patience. Even during this period of adversity, this period of uncertainty, retail investors chose to stick around with a lot of these textile names. And barring Avanti Feeds, if you take a look at the shareholding patterns of most of these names, be it Gokaldas, be it Indocount, be it Arvind, all of their retail shareholding has seen an increase from March 2025 to December of 2025. Gokaldas exports increased by 1%. Wellspun saw an increase. Indocount saw an increase, as did Arvind. So retail shareholders chose to stick around for these names. Same is the case with mutual funds as well. And here too, barring Avanti Feeds, most of these mutual funds have increased their stake in these textile names. So look at Gokaldas Exports, the very heavily fund-owned stock is now at 35%, with the mutual fund holdings was around 30% in March of 2025, and same is the case for most of the other textile names. Avanti Feeds, of course, is an export-oriented name, not textile, but that has seen a bit of a moderation when it comes to both mutual fund and shareholding bit. Now, I talk about patience. That patience is getting rewarded today, but when I mean that there is still a long way to go, take a look at this plate. You see that despite this move today, these stocks are still significantly away from their record high levels which were hit somewhere late 2024 and early 2025. Gokaldas Exports is still down 55%. Wellspun's down 43%. Indocount is down by half almost. I'm talking about yesterday's closing, of course. So today, yes, there is a bit of relief. There is a rally that's coming in all of these stocks, but still, there's a long way to go before those new highs are reached again.
Absolutely is. But thank you so much for giving us the data. Very interesting moves that we've seen in some of these exporters, which have been in focus since the time the negotiations have been going on. In fact, we spoke with the management of Bharat Forge and Aarti Industries. They're buzzing on the back of trade deal. Let's listen into what they make of this deal that has come by finally.
It's been a very, very positive development, and I'm very happy that, we have got everything done as far as India-US trade deal is concerned. But I believe from whatever I've heard from this morning from the US and late last night, that Section 232 also is under discussion between India and the US to bring it all to a levelized tariff of 18%. If almost everything will come under 18%.
Okay.
And if we look at our exports traditionally used to be in the region of about 500 to 550 million on a revenue of roughly about 1 billion. So 50% of our exports were to North America. 50% of our revenue came from North America.
It's a great positive for the sector in general and also for Aarti Industries. For a country, roughly US accounts for 20% of our chemical exports globally. And in that context, $6 billion worth of $6 billion worth of chemicals get exported to US from India every year. So in that context, this reduction from 50+% to 18% will help tremendously. Even for Aarti, as part of our total revenue, 17 to 18% comes from US. So it's also a sort of huge positive for us at Aarti Industries. But I think more importantly, the certainty will help sort of decongest a lot of decision making that has got hampered in the last 9 months from investments point of view, from future growth opportunities point of view. So overall, a very welcome move and a huge positive for the sector and for the company.
All right, strong moves coming in from a lot of these companies such as Gokaldas as well as Aarti Industries and Dixon Technologies, which is higher in today's trading session. The entire Pharma pack also gaining. We need to take a short break on that note, but up next we'll be connecting with the management of Jupiter Lifeline Hospitals to discuss their Q3 numbers. Stay tuned. Welcome back. You're still tuned into Halftime Report on CNBC-TV18. Well, great day for the markets, but let's talk about specific companies now. Ankit Thakkar, who's the CEO at Jupiter Lifeline Hospitals, joins in now to discuss the Q3 numbers and not to forget the announcements with regards to medical tourism, which were announced in the budget as well. Ankit, thank you very much for taking the time out. So before we get to earnings, just wanted your quick thoughts in terms of the announcements, in terms of the impetus on medical tourism by the Finance Minister.
Good morning, Ekta. So I think very welcome. As a country, I think we definitely can and must do more on attracting more medical tourists to India from across the world. today most of the medical tourists that come to India still come from Africa and the Middle East. I think we have a lot to do in terms of even attracting people from different geographies of the world. And I also think there's a huge potential to, besides modern medicine, also look at Indian medicine for medical tourism.
Okay, but would you participate in the public-private partnership, something that the government is looking at?
So the fine print is yet to be seen. So far, we have not really undertaken public-private partnerships. We have gone fully private. But in spirit, we are fully with the direction.
All right. Well, just narrowing down on your numbers, your volumes were quite subdued this quarter. It was up only around 2%. What impacted volumes this time?
So typically, as I've said in the past, Q2 in Western Maharashtra is a much higher volume season, because besides the steady state disease burden of the community that exists throughout the year, Q2 has a much higher infection load. So Q3 typically would see subdued volumes every year.
Okay, so what are you guiding for?
So I think for rest of the year, you're pretty much flat. Q2 has a little bit of a peak, and the remaining quarters should not see too much of variation.
Okay. But on the other hand, Ankit, your ARPOPs, or your average revenue per occupied bed, was quite steady. It was up around 10%. What is the mix like when it comes to, say, complex surgeries, complex procedures? And what are you guiding for in terms of an incremental rise?
So on the ARPOP front, two of our hospitals, I would say, are mature now, Thana and Pune both. The ARPOP in these two hospitals should pretty much grow in line with inflation. The Indore hospital still has a couple of more years of growth left in it. So in the Indore hospital, we should see a little higher than inflation ARPOP growth on account of complexity of services improving over the next couple of years.
You also had your Dombivli hospital start, 200 beds. I think it was ahead of schedule as well. So congratulations on that. But what are you expecting in terms of targeted occupancies? And do you think that's going to weigh in terms of your margins in Q4? And if so, how much?
Yes, thank you. I think it was a phenomenal effort by the team. We were able to deliver the entire 500-bed infrastructure ahead of schedule in just 24 months. So that was a great achievement, I think, by the whole team. On the operating side, I think next year or two, you should see a little bit of drag coming on account of Dombivli. Year one end should be a little bit of EBITDA negative, and year two end should break even or turn positive. That is what we are hoping for.
Okay, all right, Ankit, we're going to let you go on that note. Always a pleasure. Thanks very much for joining in and speaking with us. So that's Jupiter Lifeline. That stock up around 1% in today's trading session, saying that they need to look at the fine print of what was announced in the budget when it comes to public-private partnerships over in the hospital space. We'll take a short break, but in our Network 18 exclusive, we will bring you excerpts from the Finance Minister's first interview post-budget after a short break. Stay tuned.
Welcome back to Halftime Report on CNBC-TV18. Nifty manages to still hold on to the 25,800 above that mark is what it's trading at. But let's move on. And the big newsmaker from last evening, Finance Minister Nirmala Sitharaman, defended the budget in her first interview after presenting it in a wide-ranging interview with Network 18's Rahul Joshi. FM spoke about the hike in tax on futures and options. Here are some of the key excerpts.
The one thing that you did this time, which has become a subject of conversation, the markets also reacted, was increasing STT in the derivatives segment. And I've heard the comments by your secretaries who say that it was to curb rampant speculation. Could it have been done differently, by managing margins or contract sizes? And was it a prudent thing to do at a time when the global sentiment is the way it is, and the markets are also on a weak footing. How do you react to this?
There are many observations that you're making on which opinions can differ.
Yes.
There are people who within India comment saying India's markets are overpriced. I'm not even getting into that debate.
Sure.
The Revenue Secretary made it absolutely clear. It is not for revenue considerations that we've done this.
Yes.
It's not on all STTs.
Yes.
We are only touching on futures and options.
Yes.
Cash is not even touched.
No.
So it is the speculative tendencies. And in fact, the Ministry of Finance has received several parents, elders who call us and say, are you going to sit and watch people lose money? And one of the studies showed that 90% of people who've gone into futures and options have lost money.
Yes.
Of course, the market regulator will also do his or her bit. The institution will do its bit. So we've only tried bringing in a deterrent where speculation is rife. We are not touching the market. Other STTs are not being touched.
Welcome back. It's a green looking screen, but underneath some stocks which are under pressure. For instance, we have PB Fintech, which is down 5% after 6% downtick yesterday. Fundraise plans for some acquisition. On the back of that, there is some fall on that one. We also have Misho, which is down 5% as we speak. Varun Beverages is the stock on our radar as well. Just reported numbers, so that stock too reacting to the numbers that were just reported. That is doing well, by the way. But the big story remains the India-US trade deal. Let's get in Kirit Bhansali, Chairman, Gem and Jewelry Export Promotion Council, and Manisha to discuss what happens with the sector now. Manisha and Kirit, over to you.
Thank you so much for that. Mr. Bhansali, thank you so much for joining in as well. I've been talking to you about various FTAs and BTAs and all those travels that you have been doing with the PM. And this is something that you've been waiting for a very long time. I remember our last conversation when you told me, this is the quarter, Manisha. It will come in this quarter. It has come.
This is the second time, Manisha, we are celebrating Diwali. Second time. It's really joy moments for my sector. Everybody is very happy. Since morning, I'm receiving so many calls. It's a joy moment for all of us. As you are aware that we have seen decline in export in US with high tariff. It's a big relief for the entire sector. We are so happy. And I must congratulate our Honorable Prime Minister, Sri Narendra Modi ji, our Commerce Minister, Sri Piyush Goyal ji, Jai Shankar ji, and Finance Minister Nirmala Sitharaman. This is the result of their tireless effort, day and night. You are aware, Manisha, how many meetings they have done with US counterpart, with different time zone. When I was speaking to Commerce Secretary, Rajesh Agrawal ji is involved directly from in the deal right from first day. So he has so many sleepless nights.
I'm sure.
Today, I spoke to him also, and we all are celebrating this great moment.
Absolutely. Mr. Bhansali, we do understand that the US is the largest market for India when it comes to gem and jewelry. I would love to get two numbers from you. One, from April to December, when we talk about exports to US, what is the kind of declines that we have seen, and what is it that you're working on right now?
So if I describe in a segment-wise, we have seen 60% down in loose diamond and overall decline 44%. It's a huge decline, huge decline.
Mr. Bhansali, now that you've done so many more FTAs as well, I mean, you found opportunity when the US market was not working. We've seen UAE gain up for you, UK, you've been working on Australia, you've also been working for European Union for that matter. What is it the new financial year looking to you now with all of these markets on with you and the US markets also opening up?
Manisha, let me recall my one meeting with one-to-one with Honorable Prime Minister at his official residence, where he has clearly stated us that the government only cannot do everything. All the business leaders will have to come out from the comfort zone. All the EPC will have to work hard. This tariff, how much time it will take, it is very uncertain, difficult to say, but we will have to explore new market. And in that process, let me share you that in spite of decline in US, we have maintained that 19 billion target till November.
While we are all...
Action given by our Honorable Prime Minister,
Sure.
every business leader will have to come out from the comfort zone and work hard towards Viksit Bharat.
Oh, yes. We do understand, Mr. Bhansali, that all of us are awaiting the detail of this agreement. The notification and details is something that all of us would want to look at. But what is it that you are hoping to see in this trade agreement?
See, I'm waiting for the final outcome. But I'm hoping that loose diamond and jewelry will be zero, as our ministry and our commerce minister have worked very hard. And we have received some support from Washington, D.C. also. So wait and watch. I'm crossing my finger. It will take another 1 week time or 10 days time for the final clarification. But with 18% also, the entire sector is in very much relief, very much relief.
Mr. Bhansali, I do understand that a lot of Indian companies, listed and not listed, have been opening their stores in US. The expansion work is ongoing. With this agreement now going through, are you looking at more and more Indians exploring US, in sense of business there?
100% right, from Tanix to Malabar to Kalyan, everybody is seeing a huge market. Retail sector in US is if we talk about, I've said you in past also, there are 70,000 retail outlets already working in US. With this relief, I'm sure that our retailers will open the door.
How are you looking at the other markets performing as well? Because there are other FTAs also in work. Are you looking at overall growth going forward? I mean, any number that Council has been able to come up with on how much will US recover like, and what are you looking at in sense of various other countries?
I'm looking forward, Manisha, that we will bounce back definitely. Whatever in 2023-24, we will achieve this figure in 2026 for sure. And I'm hoping that because this inventory in US is at the lowest, so there will be huge demand, and 2026 will be a very good and very positive year for the general sector as far as the US is concerned.
All right, so the US inventory for jewelry is also at the lowest levels, and the demand from India, of course, is going to be quite positive. So absolutely a very, very positive time for the Indian gems and jewelry as a segment. Mr. Bhansali, as always, thank you so much for joining in.
Thank you so much, Mr. Bhansali, as well as Manisha, for taking us through that conversation as well. One more sector which is steering the India-US trade deal as well. But on that note, we're going to slip into a very short break. We'll continue our discussion on India-US trade deal and also connect with Neelkant Mishra of Axis Bank. Stay tuned in.
Welcome back. Well, for the markets, we have the Nifty, which is up around 2.8%, the mid-cap index, which is up around 3% at this point in time. Just want to point out specific stocks. So Adani Enterprises is seeing good gains. It's up around 11.5%. But let's move away and talk about one specific company which is in focus, that is SPARC. SPARC, which is basically Sun Pharma's R&D arm, and there's news around that where the US drug regulator has granted priority review voucher to SPARC, which is basically for the approval of one of their drugs which is used for neonatal or children's pediatric seizures. Now this PRV, which is priority review voucher, allows the FDA faster review for a drug, and it's transferable. So it can be worth around $200 million if in case Sun Pharma sells it, and that equals to around 40% of its market capitalization. So that's the reason why you're seeing SPARC actually sparkle in today's trading session. We'll take a short break, but up next we'll get you that continued coverage on the India-US trade deal and that promised conversation with Neelkant Mishra of Axis Bank.
Welcome back. Our special coverage on India-US trade deal continues. My colleague Prashant Nair joins us, and we are also joined by Neelkant Mishra, Chief Economist, Axis Bank, and Head of Global Research, Axis Capital. Prashant, take it away.
Sonal, thank you so much for that. Neelkant, thank you very much for coming back on CNBC-TV18. You know, as they say, when it rains, it pours, right? budget, trade deal, and what's next? I don't know. But let's just, this is a happy moment, happy occasion, long delayed, and it's finally come through. And the shape and form that it has come through in, which is 18%, and we've spoken with, market participants and economists and trade and otherwise, this is better than what many of our competitor exporting countries have. Your first 2 or 3 sort of, reading of what has been announced, and how durable is the impact of this going to be on the real economy and, of course, on financial markets?
Look, I must say that I think the removal of this overhang is a very important step. I think as the public pronouncements from the leaders have suggested, these are 2 very large economies, 2 of the largest democracies. I think more than the dollars that start flowing because of this, I think the symbolic impact of this is extremely important, is very high. I think the removal of the overhang is very important, specifically for sectors. Now, beyond that, I think the economy had already started to adjust to the 50% tariffs, in the sense that overall exports had, in September to November 2025, had actually grown faster than they did FY 22 to 25. As you know, there are many sectors which are exempt from IEEPA tariffs, electronics, pharma, petrochemicals, etc. So those have been growing very well anyway without this deal. The commodity exports, like say shrimp, they were anyway there was trade diversion, meaning that if the US market was shut, they started selling to China and Japan and Europe. There were sectors where I think there was some transshipment also starting to happen. And by and large, the tech side FDI had also been happening. So even before the new ambassador announced that India was going to be part of Pax Silica, the investments from the US hardware tech names from India were actually quite robust. But that does not mean that the deal has no value. There were sectors like gems and jewelry, apparel, auto components, where there was very visible impact of the 50% tariffs. I think for the businesses and the employees of those businesses, I think this is a big relief. What it also allows the businesses on both sides to do is now start planning for non-tech FDI. So on the tech side, it was very clear because it's not subject to IEEPA, as well as it's very hard to compete against China without India. But on several others, I think the FDI, the non-tech FDI, this does open the door and reduces significant uncertainty. The last point on INR, the sentiment on INR, remember that, unlike, say, a bond or an equity, the currency actually has no anchor, so there are no earnings, there are no book value, no coupons to value it on. So sentiment, sometimes the currency falls because everyone thinks it is likely to fall. This is a very welcome move. I think it boosts the currency, provides it much needed stability.
Yeah, no, absolutely. On the textiles, marine products, gems, jewelry, etc., how quickly do you think order inflows will turn towards Indian exporters?
Look, the biggest season of the year is the holiday season. So starting from Thanksgiving in the US, that is, in the Thanksgiving for April, for Thanksgiving and ending with Christmas. There are though 4 seasons, and every season there is a refresh cycle, then there is a discount cycle.
Right.
So it may be too late for the spring, but maybe for the summer, autumn, and winter, maybe those can actually still be in play. And that should be, so maybe 3 months, because anyway, every 3 months there is a refresh.
Yeah, yeah. Nilkant, the other areas, right, which is the services exports and people movement to the US, where there were lots of concerns whether there will be some protectionist measures which will be imposed at some point in the future. That idea was thrown around. You think that also goes away now with this deal?
Yeah. So anyway, those were irrational fears to start with. You look at the fact that services exports from India have been growing in double digits in dollar terms. And with the changes announced in the budget, where the safe harbor clause has been extended, it looks very nerdy and technical. But just think about a foreign firm wanting to set up a GCC in India, and I think to reach 2,000 crores of revenue, which is now the upper threshold, it'll take several years. So for several years, they don't need to bother about a tax authority so long as they're willing to disclose 15.5% as the markup in India. I think this just accelerates that process. And so that fear was, I think, unwarranted and misplaced anyway. But it's very unlikely that there will be changes on H1B and all that, because that is politically sensitive within the US. So the MAGA crowd will not like it.
Yeah. The rub-on effect of this deal on what the reaction we're seeing on equities, we'll have to see how durable this is, and then the wealth effect sentiment-wise on the broader real economy. You think it could be meaningful? No.
See, you see, if the 50% tariff was not that negative to start with, remember, it was $85-90 billion before, of course, the very fact that there will be relatively less tariffs is helpful, but nearly half of that was exempt from IEPA, the IEPA, the reciprocal tariffs and the penalty, the punitive tariffs. And there is a very high likelihood, in my view, that the IEPA tariffs will be declared as unconstitutional. In which case the US government, through a whole range of statutes, can decide to levy the same tariffs again on every country. So very likely, given how much revenue they're collecting, it will be in this 17-18% range. So at least there is tax certainty now, and we don't have a big disadvantage. But to say that it is going to really boost, I don't want to sound like a wet blanket on what is actually a very positive day. No,
I also take that, the point is that if it didn't hurt in a big way, why should it help? That's your point, right, Nilkant?
Yes.
But the point is, just to counter, it's like, it's your salary is 100 rupees, and it doesn't, you're used to 100 rupees, it goes to 200, you're used to 200. And incrementally, it has to go up from there, right? I mean, so I'm just saying, I mean, index is at wherever it is, and we're used to it. So I'm just saying, if the FI is done,
this is incrementally positive. This is incrementally positive, and I said the biggest, I think, positive is on the currency. And given how I think the volatility in the currency market had started to seep into the money markets, and through it in the overnight lending rates, the CDOIS spreads, the fact that was also then starting to show up in bond yields. I think all of those risks then take a backseat, and all in all, see, this is a very important overhang being removed.
Absolutely.
For those of us tracking the tech sector developments, the fact that all of this drama was unrelated to a more strategic break from India. That's not a positive surprise, but for many who actually thought that perhaps in the attempt to get closer to China, the US was going to sacrifice India. I think for those people, at least, this is also a very welcome development. They should reassure them.
Nilkant, just last thing, 30 seconds. There is no, this is it, right? I mean, there are no nuances, detail, etc., which will throw us off in the coming days, right? Because the full agreement will have to be, but there won't be that many white spaces in that sense. Otherwise, they wouldn't announce it like this, right?
Look, again, I don't want to sound like a wet blanket, but if you think that a trade deal is a trade deal, you talk to the Koreans and the Canadians, as some people have been tweeting about. See, and even the fine print of the executive order, we haven't seen the executive order yet. The details on the Indian side, of course, the deal is signed, it's effective, but I doubt that many concessions have been given on agriculture from India's side. Most of the things we saw in the budget were pretty much the adjustments that needed to be made. But these things can be volatile. I mean, we know how the US administration has been changing deals on the fly. So it's a good move. I mean, I don't want to sound too negative on a good day.
You are sounding non-negative, but you're sounding a little cautious.
Because I don't think it is that important. I think for the economy, if you are able to get a rate transmission going,
yeah,
I think
that'll do the job.
happens in these deals is actually far less important than that.
Okay, well, everything helps, right? Little bit. So we'll see. Thank you very much, Neelkan, for joining us. Great conversation as always, and appreciate your time here on CNBC TV18. Well, I think we'll say goodbye on this program, but we'll have business lunch, which will pick up on the action in just a bit from now. Stay tuned. Markets, of course, looking very good.